Well, joining me now is Gemma Rasmussen from Consumer. Gemma, $22 billion. That is just a huge figure, isn't it? Were you surprised?
Yeah, we were surprised. I think the Bank of Mum and Dad is one of these things that we hear about. You might hear that someone you know has offered or received assistance, but to actually get a figure really highlighted the enormity and the influence that the Bank of Mum and Dad has on the property landscape in New Zealand.
Yeah, and these are not small loans, are they? So the average is around $108,000?
That's right. So there are a number of ways in which parents have contributed. So the most popular way was to offer up a deposit, but other things included acting as a guarantor or letting kids live at home rent-free. But the total value equated to around $108,000 per child. So it's a massive contribution.
And what impact, Gemma, does that have on the parents?
Well, the majority of parents were really willing to offer help to their children. The overriding sentiment was that they were happy to do so. About 1 in 10 said that it caused financial stress for them, and there was a number of others that said that they had to dig into their savings or cut back on expenses themselves. It could potentially create a degree of vulnerability for some parents, particularly with inflation rising, interest rates going up. So a lot of parents are really struggling to make ends meet just to help get their kids on the ladder.
Yeah, well, you think there's around 14% of parents which help their kids out, which I suppose means that the majority out there aren't so lucky to be able to go to the Bank of Mum and Dad. So does this show us, I suppose, that we're seeing greater social divide of who gets to buy a home and who doesn't?
Yeah, I think that is true. About 20 years ago, about 6 times of your wage would equate to the average house price. Now it's 15 times your wage is the average house price. So what it means is that if you really knuckle down and save, you're probably still going to really struggle to buy a house. And it means that people who have intergenerational wealth are more likely to be able to stay secure and stay, owning property. And there's going to be larger groups of people that are essentially locked out of the property market.
Yeah.
We asked people who weren't property owners whether they felt locked out, and 50% said that they did.
Yeah, and so I suppose it shows that it's getting harder and harder for people to get into the property market, and mum and dad are becoming more and more important out there, Gemma.
Yeah, absolutely. I think that we would have to see some pretty drastic changes in New Zealand to the state of the price of housing for this to change, and the Bank of Mum and Dad are going to continue to play a really big part for better or worse.
Well, Gemma Rasmussen from Consumer New Zealand, thank you.